Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, welcome back to another episode of ETF Spotlight. I'm Daniel Snyder. Today, we're jumping into the world of crypto, and specifically an ETF by Charles Schwab that our analyst joining us today says is compelling, but also comes with risks. And of course, looking at the recent crypto scenario in the markets, the pullback is on, so maybe this ETF reflects that as well, but maybe it produces the alpha going forward. So today we are joined by the Alpha Analyst himself, who's been writing here on Seeking Alpha for the last year or so. So welcome to the program. First things I would love to do is just dive in. What is your background that you have in the space and financial markets, and what really interested you in the crypto arena? Let's go ahead and start there.
Yeah, so I have around 15 to 20 years of experience in technology. I was in software, and then I jumped into quant trading, quant model building, moved into risk for quite a decade. That was in Barclays. And yeah, that's pretty much been my background. I have a risk hat always on. And unfortunately, STCE has not lived up to that risk hat. But again, when we dive into the details of STCE, I'll talk about how to play crypto. We can't be defensive in this space. So, but anyway, coming back to your question, that's about myself.
Yeah, so let's jump into it. So you kind of teased it already. STCE, which is the Schwab Crypto Thematic ETF. Can you kind of give us a little bit of the inner workings? How is this ETF put together? And I mean, I was looking at some of the holdings. Maybe you can touch on this as well. A lot of miners in there, it seems right now. But what is the basics of this ETF?
Yeah, so I think why I picked up STCE is, so there are several alternatives to STCE if you want to bet on the crypto theme, the crypto ecosystem, and there are other ETFs also in play. There is PKCH, there is VanEck DApp, and there is Block. And you will generally see they do pretty close to each other. They are fairly correlated. But what sets STCE apart, what took my interest was the way they approach the methodology, which is kind of a very balanced, beautifully balanced middle ground of active and passive trading, or rather active and passive methodologies, if you want to put it that way. They have taken out cognitive biases from the methodology. They've kept it active in a way it is agile. So the last time I saw STCE, when I was writing about it in September, it had a bunch of names that have now come out of the top 10. It's that agile, which is something you will not see in passive plays, even in the crypto space. So STCE kind of makes it very active, agile, and between the quarterly rebalances, it will allow for the momentum names to grow within the portfolio, because it is fairly concentrated to most crypto ETFs are. But yeah, again, the differentiator, I think that stands the test of time. Performance shows in the last 1 year that it has been in the top 1 or 2 crypto ETFs consistently. It may not be the top all the time. It is very high growth, high risk, as well as we have seen in the past few weeks of crypto-led corrections. So yeah, that's something that excited me. The way they approach it is through a machine learning algorithm, which is at the backbone of this ETF, and that, as I mentioned, takes out the cognitive biases that even human active portfolio rebalancing does not in a lot of cases. And I have been there in trading desks, so yeah. There are biases of doubling down on, losing positions, etc. This takes that out of the equation. It simply looks at publicly available data sets, publicly available documents, picks its stocks basis of a thematic beta, which is a score it assigns, It assigns some kind of a weight to the past holdings so that it's not completely, a very radical maverick change from one rebalance to the other. But yet it allows changes. I think if you look at the top 10 holdings today, names like Bitfarm and Hive are there in the top five, commanding somewhere around 12-13% of weight for the portfolio. This wasn't there in the top 10 in September. So that's the kind of agility that is brought to the table, which is very important for crypto particularly. Crypto is a space where, chasing momentum is the way to go. That's my take. And over time, you'll see the ups and downs, of course, like you have seen in STC. It can be used tactically as well. STC, I think, bounced 100% almost from the time I wrote. And that has been, again, that's sorry for digressing, but that has been one other key feature of STC because of its agnostic methodology, which is more machine driven or machine learning driven. It has been able to pick out those, non-traditional crypto plays. I saw Nvidia in there. I saw PayPal in there. I saw, Robinhood and other fintech and digital infrastructure names as well, which means you are not entirely reliant on, the crypto rally per se or the crypto prices. It's another matter that the crypto prices are indirectly linked to crypto adoption, but this can grow with crypto adoption, if not crypto prices. Since the time I wrote, crypto prices haven't really made large moves, which I was expecting. This was heavily correlated to crypto prices right before I wrote, but it has been largely an offshoot of, you may call it accidental holdings in Iron and Cypher, which gained because of the AI pivot that they were into, rather than crypto-led boom. So that is the kind of possibility that opens up with STCE. It will give you diversification across the crypto world, keep the thematical orientation quite pure as much as it can, but it will assign weights to certain names that can gain from other bullish factors like the AI data center push for Iron and Cypher. So yeah, that's pretty much the primary reason I think why I would overweight STC in my portfolio. I want something that's reliably passive, but at the same time active and agile. So it brings the best of both the worlds together. It is agile, it reacts very fast, which is very much required in the crypto space, but it doesn't do a trade every day like something like Block does, for example. So it waits for a quarterly rebalance, but when it does the rebalance, it acknowledges the thing, doesn't look at backward looking matrices too much like fundamental factors or market caps and things. Market caps react very late. It's already a backward looking metric. So STC brings in that agility, brings in that forward looking or rather momentum chasing angle to it, which is the way I think crypto should be played. Defensive doesn't work in crypto. And yeah,
If I can interrupt you for a second, I want to ask you this, because we're talking about the turnover of the names, and we're talking about the turnover of the weights of the names within the portfolio, and the turnover. If I'm looking here on the Seeking Alpha symbol page, turnover 60%, and you're of course paying a 30 basis point expense ratio, and the space is always evolving so quickly. So you have this diversified approach, as you're saying, with miners, and I know Coinbase is on here as well. So you're talking about exchanges. You mentioned Robinhood. You mentioned a couple other names.
Yes. Yeah.
But why just diversify over the entire space in an ETF like this instead of just own the ETFs, which are like the pure Bitcoin plays in the space? What's the advantages and risks here?
So if you are asking me why not a pure Bitcoin correlated portfolio? Is that your question, if I got it right?
Yeah, exactly. So diversifying, because with these names, you'll also get exposure to Ethereum and all the other coins that are trading on exchanges.
Yeah, understood.
Also the argument of people wanting only a sole source of maybe Bitcoin, thinking that it's the leader.
Yeah, so I think that is very well explained in the last rally, the 100% rally. If you look at it from a Bitcoin price perspective, Bitcoin didn't go anywhere, almost didn't go anywhere throughout that rally. And the diversification helped because it can pick up, other factors that mitigate your expectations of a Bitcoin price increase, if you will. And the other factor is that if, for example, all we need for more crypto adoption is crypto stability. It need not rise all the time. crypto prices need not rise. But if it is stable and people adopt crypto, they use it in wallets. So names like that will come into a portfolio like STC, and that allows a company which is growing just because of adoption and not because of crypto price boom to rally, and that helps the cause of a very well diversified crypto ETF. I think most ETFs do that. It's not like the other ETFs like PKCH, TAP, and the other ones I named Block. They too have diversification, but this is proven by performance. In the last 1 year, it's been in the top two, as I mentioned, and it is agnostic. It is almost like takes a call on the basis of data points rather than fundamentals or active selections.
Now, earlier in the conversation, I want to wrap up with this. Earlier in the conversation, you mentioned that crypto is a space that is heavily influenced by momentum, right? And I think that was the words you mentioned. Now, year to date, STCE as an ETF is up 49.5%, which is tremendous, right? We've had amazing crypto rally this year, but in the last month alone, it's down 30.3%. So obviously some would look at that and go, well, momentum is slowing, momentum is stopping. Should I be worried here? Should we be worried about the momentum slowing down in the crypto space?
I don't think so. People who are trading in crypto and investing in crypto should be ready for this, right? For example, if you look at again, as you mentioned, year to date, it's still high. So it will be higher highs and higher lows. That's how the journey is going to be. All over the world. In the US, there have been regulations to make crypto adoption a little more friendlier and transparent. This is happening across the board. It's happening in India. It's happening in Europe as well. So regulations are coming in. I think crypto adoption will go up. Crypto volatility should come down. That is when it becomes more adoption friendly. But yes, I think volatility will be part of the game. Momentum plays will go through phases of dull share prices as well. I think dull is the wrong word here. Exciting share price moves, but yes, there will be downsides. There will definitely be downsides, but there's nothing to be worried about per se right now. It's so I had written another article about the markets kind of being in a zone where it's not a unilateral upside move anymore. That holds true for crypto as well. So we should be looking out for a dumping down of the volatility levels. If that is happening, then that should be fine for a crypto investor, in my view.
All right, that's a good place to end it right there. Let's go ahead and say thank you so much to the Alpha Analyst, everyone. If you want to go reach out and follow him on Seeking Alpha, highly encourage you to do that. Go follow some more of the research and keep an eye on STCE if you're interested in the crypto space, as I know many of you are. Thank you so much for taking the time to speak with us today. Everyone, Alpha Analyst, and I'm Daniel Snyder, and we'll see you again here next week on Next ETF Spotlight.